Next up, we have a panel looking at the impact of digital currencies on global remittances and financial inclusion. So I'd like to welcome our moderator, Stan Higgins, and his panelists.
Hey, everybody. So today we are talking about digital currency, global remittances, and financial inclusions. Today we're joined by Shere Wallwork. She is a senior counselor for the Strategic Policy Office of Terrorist Financing and Financial Crimes for the U.S. Department of Treasury. We have Kosta Peric of the Bill and Melinda Gates Foundation, where he is the Deputy Director of Financial Services for the Poor. We also have Steven Malby, who is with the Commonwealth Secretariat, where he is the Head of Law Development Section with the Rule of Law Division. And finally, we have Maxine Ryan, Co-founder and Chief Operations Officer of BitSpark, a Bitcoin remittance app. Thank you for joining us today, guys. So remittances, financial inclusion, huge topic. So I think the best way to jump into this is just to throw some questions on the floor, have everybody bring their own unique perspective to it, and just see where things take us. So to set the stage for what we're going to talk about today, we can just kind of move down the row. My first question is, from your perspective, what's driving financial exclusion in the world today? And start with you, Maxine.
Sure. For me, financial exclusion basically means having a lack of access to financial services, which otherwise doesn't have any alternative option available. And I think one of the biggest things that is driving financial exclusion at the moment is having a weak financial infrastructure. So under that umbrella, it's very simple things on the micro level, such as having a lack of financial identity, having something as simple as having a stable salary, let's just say. So if you think about it, the rules that apply to people who are unbanked are very different to people who are banked. And it's that predictability of someone's financial income that can have a lot of effect.
Interesting. Stephen?
Yeah, thank you, Sam. So the Commonwealth is an association of 53 countries, very diverse across the Caribbean, Pacific, Asia, and Africa. And typically what you see is the developed countries. You've got, just as one indicator, 80 to 90% of persons in developed countries have a bank account at least. In the developing countries, it's much more around 25%. So there's really a huge diversity within the Commonwealth. And I think there's a number of reasons driving that. As you say, I think the nature, the type and reliability of your income. Many people may be subsistence-based, so just taking from the land and may not necessarily be realizing cash on a regular basis and being able to put that into services. Age may be an interesting factor. Often a primary income generator may actually be very young and may not even qualify for banking services. Financial literacy, education, I think is a huge issue. There's a lot of evidence, particularly in the Caribbean and Pacific Islands, that when you start educating people about what financial services mean, that they're less scared and actually able to approach service providers for whom they may well be eligible, even though they didn't necessarily think so. Geography distance can be a huge issue. Botswana, maybe one bank per 10,000 square kilometers. So really access is just an issue of walking sometimes. And as well as that, of course, we have all of the qualifying requirements that you spoke about, charges, documents, lack of assets in the first place. So multiple reasons.
Excellent. Kosta?
Yeah, I'll just add some numbers. According to the numbers from the World Bank, there is about 2 billion people on the planet today who are excluded from any access to financial system that therefore deal with cash on an everyday basis. Also, the vast majority of these people are very poor. On average, we are talking about households that earn less than the equivalent of $2 per day. That is on average, and this is you should understand that they are also very much driven by harvests, so it's a very irregular income. And the issue essentially has to do with, from the traditional banking system, is the lack of reach, because they are out of the big cities, they are out of reach of the bank's branches, they are out of reach of ATMs. They don't have access to internet. So the traditional channels are not available to reach them. And also, even in the case that there is a reach, there is very often a problem of a business case for incumbent banks to serve these people. So that's, that's another angle on the why they are not excluded. The interesting other number, which is going to be relevant for the rest of the discussion, is that on average, again, more than 70% of that people, of this population, is in the reach of a mobile phone signal and have access to a mobile phone, which is a great enabler for digital financial services.
Interesting. Anne?
Well, first I need to make a disclaimer. Anything I say represents my personal views only and does not necessarily represent the views of the Department of the Treasury or of the US government. There. Okay. So I think that financial exclusion is an issue across both developed and developing economies, and we've already touched on a multiple of factors. They differ with respect to the level of infrastructure that a country has. What I would like to focus on, because I think it relates very closely to the potential of blockchain technology as a solution, is the issue of formal legal identity, and in particular a movement to what I would hope we will see is a movement to digitized identity systems, and obviously the technologists that are going to pick up right away on how blockchain technology, whether it's a national identity system or one that financial institutions develop kind of as a proprietary product, it comes into play, both in terms of the initial creation of an identity product and then the access to it. In terms of the kinds of stats that Kosta referred to, the World Bank also estimates that about 750 million children around the world lack any kind of legal identity. And in sub-Saharan Africa, for instance, the estimate is 55% of the population. So where previous panelists have been talking about the primary kind of emergent use case for blockchain technology with respect to payments, you see the same confluence with respect to identification. And since identity is so important, not only to the delivery of social services and benefits and democratic rights like voting, it's also a key to access to regulated financial products and services around the world. So
excellent, excellent. So as you can see, there are many different, factors and issues that are driving this problem. So to go into my next question, how can technology, including Bitcoin and the blockchain, address these barriers to financial inclusion and perhaps help streamline remittances, make it easier for people to send money abroad? What are some ways that you see, based on your work, your experience, your opinion, of how this technology could, solve some of these problems? Maxine?
Yeah, so maybe I'll just kind of dive into what exactly BitSpark does. And basically, we are the world's first cash-in, cash-out blockchain remittance solution, providing back-end software for money service businesses. And basically, we help these money service businesses transfer their customer funds cheaply, instantaneously, and also with no tech knowledge necessary as well. So what we want to do is we want to be able to provide software where people can use it in terms of in their daily life. So if you're looking at the unbanked, they're mostly still a cash-based and a network system, and that's very important to be able to provide applications so that they are able to still harness this, but in a better way, in a more efficient way. I think when people are looking at Bitcoin or the blockchain, there's this assumption that overnight this is going to be adopted, but that definitely is not the case. I want to suggest to entrepreneurs to definitely build applications responsibly, but also keep in mind that the people that are going to be using these services are in a structure that's very different to the first world.
Steven?
Yeah, thank you. Maybe just also to give you a little bit of background about why the Commonwealth is involved in this. And we certainly have many ideas, I think, about how Bitcoin blockchain technologies could assist in remittances. So within the Commonwealth, a working group on virtual currencies has been established. We have Australia, Barbados, Kenya, Nigeria, Tonga as main countries involved in that, and the US as an observer. We bring together also some international organizations, the UN Office on Drugs and Crime, the IMF, the World Bank, and Interpol. And that group is presently having a series of meetings. It met for the first time earlier this month, and it was very, very enthusiastic about the use case of using virtual currencies to improve remittances and to streamline those. It's currently producing a report which will look on nature and extent and uses of virtual currencies across the Commonwealth with a view to generating some technical guidance for countries on how best to both stimulate their use for socioeconomic development and also potentially to address negative uses such as terrorist financing, etc. So we're looking across the range of AML, tax, consumer protection, and criminal law investigations. So that's sort of the context in which we're looking at the remittance issue. Some specifics on how they could help. I think the obvious one is, of course, reduction in cost, increase in speed. And that's the one that everyone talks about. So I'm not going to go into that very much, actually, because I think those are sort of quite technical issues. But from a more socioeconomic perspective, I think there's also some other potential benefits which maybe aren't so talked about. They might include, for example, if persons can remit to a relative or somebody in a developing country using Bitcoin, you could potentially vastly increase the network of people who would be sending you remittances, because handling micropayments better, just the ease of doing it from a mobile phone potentially, you could increase your number of remitters and therefore increase your resilience to economic shocks, such as times of unemployment or natural disaster. It's an argument that applies a bit to digitization in general of remittances, but there's also a strong argument for empowerment of women. So when money can be sent directly to a mobile telephone, for example, as it could be with a Bitcoin facilitated transaction, then you see that the woman who would receive that money may have much more control over it within her household environment than she might otherwise have if she had to go to collect the money from a normal transfer business. And so there's definitely an empowerment argument there, I think, which is really critical. You may have some side benefits, such as reduction in opportunities for corruption, particularly where you have a lot of organizations involved in a traditional value transfer chain as well. One very interesting benefit that may come out, we've seen within some Commonwealth countries, for example, there's an organization in South Africa which is looking to attribute Bitcoin addresses to prepay smart electricity meters. And what you have there is a very interesting idea that remittances is no longer just about receiving some cash and the receiver can do what they wish with it, but you could actually pay someone's electricity bill directly, remotely from any country in the world. That could also, of course, apply to charitable giving, for example, supporting electricity in schools, and these type of issues. So I think actually, when we start looking at it, there's really a very large range of additional benefits that some of this technology could bring.
Cool. Kosta?
Yeah, it's been mentioned several times today that it's important to define the problem we are trying to solve before we see how blockchain can jump in. So just let me briefly describe. We are focusing more on domestic systems. So we work in very populous countries like Kenya, India, Pakistan, Bangladesh, Nigeria. And the first problem to be solved there is really, when you want to have a fully inclusive system, is to work with the ecosystem of providers, financial or mobile network providers, to actually form an ecosystem, a platform that can reach the poor people. And it is important to leverage, for example, the mobile network operators, because they have the last mile to the actual users. But also it's important to connect them with banks, because banks, of course, provide the liquidity and the currency of the country which we deal with. So on one hand, it's important to form the ecosystem. On the other hand, as I mentioned, one of the key issues is the business case of actually providing services to the poor people. And technology can contribute to drastically reduce the cost, which is a very important part of the business case. the cost of providing these services. So we have designed a vision of how such a domestic platform could look like. I don't have time to explain it, but I would urge you to have a look at, we call it Level 1 Project. You can look at level1project.org website. It describes what this ideal payment platform looks like. And within that, where blockchain, we have been looking at blockchain as a potential technology to reduce costs, is in the settlement between financial service providers, whether they are mobile network operators or banks. Today, the settlement is something that, on the payment side, that is done at best intraday, and includes a lot of processing costs, overheads, and risk. So one scenario we've been looking at is how can blockchain essentially equate the money movement with the messaging movement, and therefore reduce drastically the time, costs, and risk. There are some positive experiments that this is indeed the case. Blockchain gives some other issues to deal with. Many of them have been mentioned: public blockchain or private blockchain, identity. And so, but essentially, it is a promising path that we're looking at.
Cool. Anne?
Well, I think one thing that blockchain technology may enable is, just as cell phone, mobile phone technology allowed countries to leapfrog over some of the traditional financial infrastructure, and not to mention communications infrastructure, so blockchain technology, especially in countries that lack national identification, registration, and certification systems, may, by creating electronic identity credentials, allow, again, a cost-reducing, but also much more robust identification system that would give more assurance to both the financial institutions that are providing services and to governments in the delivery of social services. The framework, both domestically and internationally, when it comes to financial products and services, especially money movement, really is subject to international standards that are established by the Financial Action Task Force, just as the Basel establishes certain other kinds of requirements, capital requirements and security requirements and safety and soundness for financial institutions. So the FATF establishes international standards for anti-money laundering, counter-terrorist financing, and counter-proliferation finance, and then jurisdictions, including developing countries, need to develop national frameworks for implementing those standards. And so whether you're talking about international remittances and international flows or flows domestically, there are legal requirements for identity that need to be met in order to comply with the FATF standards, and it matters whether you comply with the standard, whether a country complies with the FATF standards, just like it matters whether a financial institution in a country complies with the legal requirements that implement those standards. And so to the extent that blockchain technology can become a basis for apps that allow for the kind of pattern identification for customer due diligence, or for initial identity, or identity as a component of that pattern recognition, it's really both very exciting and shouldn't be separated from kind of the payment notion, the payment rail itself. It's really integrated.
Interesting. All right, so here's the potential here, but so what are the risks and challenges of using this technology to apply it to these problems? So where could the pitfalls be? What could the roadblocks be? Maxine?
Yeah, I think one of the biggest roadblocks for us as a Bitcoin remittance startup is the fact that the countries that we're focusing on, which is mostly emerging markets, there isn't this predefined notion of what the global standard is. So we have to be very careful in terms of being able to collect the correct AML, KYC, and being able to hold our money service businesses to a global standard. But as I said, if we're working in emerging markets where the governments might not be looking at blockchain remittances, their regulations aren't at the same standard as, let's just say, the United States. So for us, one of the biggest risks is making sure that we're not crossing any lines and being sure that if rules and regulations are made in the future, that we are definitely safe within that framework.
Steven? Yeah, I think I definitely very much agree with that. And in fact, what we've seen in the Commonwealth is that where Bitcoin-based remittance companies have been established, for example, you think of BitPesa, for example, in Kenya, then actually the framework for AML CTF is unclear, but the company is certainly undertaking voluntary compliance anyway as a form of risk mitigation. So we're definitely seeing that. I think in terms of challenges, that there's probably at least 2 or 3. The first one, I think, is really the interaction between a Bitcoin-based transfer, an international or domestic transfer, and then the domestic state of the financial system and the degree of financial inclusion. Because, of course, at the moment, with Bitcoin markets in developing countries not really established to the extent that you can just go and spend Bitcoin, you're going to have to cash out your received remittance somehow. That happens in different ways. In Kenya, there's the very favorable situation of the mobile banking and the M-Pesa system, and there have been some initiatives to directly connect a Bitcoin incoming amount to the M-Pesa accounts that you have on your mobile phone, and then you can receive it as mobile money, and then it's almost as good as cash. So I think there's a big question about how do you cash out? Does it have to link to the main banks in the country, or could you have a distributed network of small vendors in post offices or local shops that could somehow transfer your Bitcoins into cash? And if so, would they be regulated by ML-CTF, for example? There's much evidence in Africa that one of the reasons why people like M-Pesa is because they go and deal with a local agent. And the sort of the one-to-one interaction with a person just down the road is something that's very favorable for that system to work. So how do you integrate Bitcoin remittances with that? The technological infrastructure is also a very big challenge. You take Lesotho, for example, 21% of GDP is from remittances in Lesotho, and yet only 11% of people in that country use the internet. Mobile broadband is only at 8%. Bank accounts at only at 18%, and only 2% of people in the country have made an electronic payment ever. So how do you make use of that market to actually introduce Bitcoin is extremely challenging, I think. One final area is really technological simplification. Again, to use M-Pesa, one of the reasons why that was so well taken up was because people could literally send a simple SMS in order to make a bank transfer. They didn't need even a broadband mobile phone. Some work has been done by Kipochi, for example, also in Kenya, whereby you could make a Bitcoin transfer to a wallet just with an SMS. And I think actually for uptake to work in the African context, for example, and other developing contexts, this technological simplification is really going to have to take place in order for it to be taken up by people.
Kosta?
Yeah, from my perspective, I think if you just go back to the numbers I was mentioning, and if we are successful in connecting billions of people, the transaction rates are going to be huge. They are going to be in the multiple tens of thousands transactions per second. And if we have, as I mentioned in our level 1 project, domestic payment platform vision, connecting and it will unlock a huge amount of transactions. So if the blockchain distributed ledgers are in the picture, how sustainable is that is one big question, I think. The second big question also is, if you look at it, this platform being almost now like a national asset, strategic asset. So the question becomes naturally, should it rely on a public blockchain spread across the planet, or is it something that should be more controlled? That's another big challenge, I think, ahead to be discussed and debated and decided. But it's certainly a big big challenge ahead, I think.
Anne?
Well, I think that to elaborate on Kosta's point, to the extent that you get huge scalability here and a lot more assets going, a lot of the blockchain concept assumed rational economic actors. And when you have a given amount of flow going on or settlement of securities at large volumes, you need to start worrying about state actors or terrorist groups that aren't necessarily going to be acting out of rational economic factors. So the whole issue of permission versus permissionless, who's going to control which blockchain and how you're going to deliver those services, especially if you start to have government benefits, for instance, flowing over them, I think are all issues that need to be addressed. And then John Edge in his presentation mentioned, the need for really reliable data on the blockchain, the garbage in, garbage out. And so when you are talking about, for instance, a formal legal digital identity that'll work in the financial space, you have issues of who's going to provide the initial personally identifiable information, how is it going to be authenticated, who is going to be able to participate in the system for obtaining that data, whether it's a financial institution or law enforcement under hopefully due process of law and auditable kind of constraints, and all of these issues, I think, are ones that need to be really considered and worked out. And again, I think that there may be some very exciting technologically based solutions, but I think it's very important for the technologists in developing their products to have an awareness of the legal framework. Certainly for fintech, for the financial sector, it's highly regulated worldwide, and there needs to be an awareness of those requirements so that they can be built in, and you harness the capabilities that you have to address those issues.
Excellent. All right, well, we have a couple minutes left, so maybe we can take one or two questions from the audience. If you want to ask a question, raise your hand and pose it to our panel. Yes, sir.
About using Bitcoin for third-world countries and remittances payments. A lot of those places currently don't have an internet structure to be able to be reached out with Bitcoin. So how will, as an entrepreneur, how will we address the issue of being able to reach out to people with internet first and then with Bitcoin?
Anyone want to jump on that one?
So indeed, so the question is, how can we address essentially the lack of internet connectivity for digital financial services in general and Bitcoin in particular, in fact. So it is a big constraint. I did mention 70% of households and people actually having access to mobile phones. These are the simplest mobile phones, not even feature phones that we are discussing. And it is true that smartphone as a technology is progressing hugely, and the cost is getting down considerably. But nevertheless, we have huge numbers of these phones. So we have to deal with the simple fact that sending money has to be as simple as sending an SMS, like the M-Pesa case or Bcash in Bangladesh, that demonstrate that this is possible. And this is for national currency. Now, Bitcoin, on top of that, would require some form of gateways. I think that was mentioned in the morning as well, a gateway type structure that would enable some form of access to Bitcoin addresses that is not available on the end node.
Anybody want to add to that?
Well,
take it away.
As a non-technologist, if you have the Bitcoin reducing the costs in the back end, you don't really need to have access to Bitcoin by the ultimate recipient. You have an infrastructure that is the exchanger, and they provide the fiat currency, and they can even do it onto a cell phone. That kind of transfer, though, really does require some consumer identification and due diligence in order for countries to be comfortable with money coming in that way.
If I may add, just there is examples of mobile network operators that provide mobile money services actually adding bridges, not only to Bitcoin, but like international transfers, other currencies. So I think that's probably a very, very open and area open for innovation and profits, I think, certainly.
Excellent. All right, well, we're out of time, unfortunately, but thank you very much for joining us today, and thank you guys very much. Thank you.